Hey everyone, welcome back to Corporate Decoder. Today we are diving into the financial report of Markforged Holding Corporation. And let me tell you, it's not exactly a feel-good story. It's more like a roller coaster with a few too many drops, so buckle up. Markforged just released their latest financial results, and we are going to break it down for you in a way that even your grandma could understand. We're talking about their performance up to the end of last year, specifically December 31, 2024, and how they did during the last 3 months of that year. Did they make money? Did they lose money? And most importantly, what does it all mean? Markforged announced their financial results, and they put out a press release about it. Big deal, right? Well, that press release is actually pretty important because it gives us a sneak peek into how the company is doing before we dive into the really nitty-gritty details. It's like the trailer for a movie you're about to watch, it sets the stage. Now, let's get to the good stuff, the numbers. This part is what everyone cares about because it shows if Markforged is swimming or sinking. Forget all the fancy words and legal stuff. The numbers tell the real story. Time to find the income statement and balance sheet, which are critical for any analysis. They seem to be in the press release. Okay, let's talk money. In the fourth quarter of 2024, Markforged brought in about $31 balling $1.4 million total revenue, which means how much money they made from selling their 3D printers and materials. But here's the kicker, that's actually less than what they made during the same period the year before. Back then, in 2023 period, they pulled in $30 and $4 they made during the same period the year before. Back then, in 2023, they pulled in $30.24. Markforged brought in about $31 than what they made during the same period the year before. Back then, in 2023, they pulled in $32 million. So their sales actually went down a bit, not a great sign. Gross profit is the money a company makes after subtracting the cost of making and selling its products or services. Markforged's gross profit for the fourth quarter was $17.9 million. This is an improvement from the previous year when it was only $16.7 million. This can indicate better efficiency in production or pricing. Operating expenses are all the costs a company has to pay to keep the lights on. This includes salaries, marketing, research, and all that stuff. Markforged spent a whopping $41.7 lobbing $41.7 million on operating expenses in the fourth quarter. That's more than their revenue. Here comes the bad news. Markforged ended up with a net loss of $23.6 million for the fourth quarter. That means that after paying for everything, they ended up in the red. A company's cash position is always critical. Markforged's cash equivalents, and restricted cash totaled $120.90. This is still a sizable chunk of change, and hopefully enough runway to get the business on the right track. Now, let's zoom out and look at the whole year. For all of 2024, Markforged net revenue, again, which is the total money they brought in from sales, was $113.7 million. But get this, they actually made more the year before, pulling in $117.3 million, $17.3 million in 2023. That's a decrease of about 3%, which isn't the end of the world, but it's still not good. For the whole year, their gross profit was $63.8 million, and it's $65.1 million in the prior year. Their operating expenses for the year were $16.703 million. And the bottom line, they had a net loss of $103.03 a year. That's a lot of money to lose. It's even more than the $85.1 million they lost in the year before. Ouch. So what does all of this mean? Well, simply put, Markforged isn't doing great. Their sales are down, their expenses are high, and they are losing a lot of money. It's like they are trying to fill a leaky bucket. The financial figures paint a concerning picture. Revenue is down both for the quarter and the year while they have a good amount of cash. It's burning fast. Now, for my take on Markforged, based on these numbers, here's what I see. Markforged is in a tough spot. They are in the 3D printing business, which is a growing market, but they are facing some serious challenges. They have a decent amount of cash, but they are burning through it quickly. If they don't turn things around soon, they could run out of money. One of their biggest weaknesses is that their expenses are too high. They are spending more money than they are bringing in, and that's not a sustainable business model. They need to find ways to cut costs or increase sales, and preferably both. On the opportunity side, 3D printing is still a hot area. If Markforged can find a niche, develop better products, or improve their sales strategy, they could potentially turn things around. They need to focus on what makes them special and try to dominate that specific area of the market. Overall, Markforged is a risky investment right now. They have potential, but they also have some serious problems that need to be addressed, and fast. Thanks for watching Corporate Decoder. If you found this breakdown helpful, give us a like, drop a comment, and subscribe for more deep dives into the world of corporate finance. Until next time.